Taxes and Income, Lesson 1. Why do we pay taxes? In this lesson, you're going to learn what taxes are, why you pay taxes, and where your tax money goes. It's considered your civic duty as a citizen to pay taxes, and it's required by law. The Internal Revenue Service, known as the IRS, is in charge of verifying the amount that you owe. If you pay your taxes incorrectly, the IRS issues penalties such as fines or even jail time. Taxes are mandatory payments to the federal, state, and local governments. The tax money is used to fund public goods and services. Everything from public schools and infrastructure to national defense. We are all required to pay taxes, which are used to help improve and maintain our communities and country as a whole. Federal income tax is the largest deduction you'll have taken out of your paycheck. In 2022, the federal government will receive $3 trillion in tax revenue, and half of this revenue will come from taxes paid by the average person. The majority of federal taxes go towards public programs like Social Security, health programs for low-income families, education programs, safety net programs like welfare and unemployment, paying down the national debt, as well as national defense and security programs like the FBI, CIA, and the military. Not all states have an income tax. If yours does, those tax dollars go towards things like healthcare programs for low-income families, public education, public transport, infrastructure spending to repair buildings and bridges, correctional facilities, and other state programs like the state police, parks and recreation, and pension programs for retired state employees. If you live in a state that has an income tax, then the area that you live in might also charge a local income tax. If they do, local taxes are often referred to as municipal taxes. These are used to fund government and city services like the local police force, fire department, education and health services, libraries, road maintenance, and other programs or projects that benefit the community. The biggest difference between local taxes and the other taxes is that the benefit of local taxes can be seen at the community level where you live. On top of paying taxes on your income, the government will virtually tax every dollar you spend. So one way or another, you're going to be paying taxes. Most people just don't realize how much of their money goes towards paying taxes. A consumption tax is a charge on consumers when they spend money. These are taxes that you pay when you purchase a good or a service. Consumption taxes can take the form of a sales tax, an excise tax, or other taxes on consumed goods and services. Because of these types of taxes, you'll end up paying a higher retail price for whatever it is that you're buying. The higher price includes the tax, which is collected by the vendor and then paid to the appropriate federal, state, or local government that imposed the tax. This type of tax isn't a new idea. The U.S. government used a consumption tax for almost its entire history before replacing it with a federal income tax, which is what we just covered. So let's break down consumption taxes a little further. When you buy something, retail sales tax is usually added at the point of the sale for most goods and services. The retailer or service provider passes the money that was collected onto the state or local government that imposed the sales tax. This is a type of consumption tax. While most states exempt groceries, healthcare, and housing from retail sales tax, each state has control over whether or not they want to implement it. There are currently 45 states with a retail sales tax. States with no sales tax include Alaska, Delaware, Montana, New Hampshire, and Oregon. The average sales tax is around 5%. In addition to the state sales tax, 38 states allow local governments the authority to impose their own additional sales tax. In some cases, local taxes can be just as much, if not more, than the state sales tax. So when you consider making a purchase, you have to factor into paying those taxes on top of the price of the goods or services. The money collected from state and local sales tax goes into a general fund for things that we all use, need, or enjoy as a society. Zoos, libraries, museums, parks, schools, pensions for retired state or city employees, healthcare, medical facilities, police and fire services, as well as jails are just some of the programs that are funded by the tax dollars that you pay on almost everything that you buy.
An excise tax is another type of consumption tax. Most excise taxes are paid by the business and then passed on to the consumer by charging higher prices. Gas, tires, airline tickets, tobacco, and firearms are just some examples of products and services that have an excise tax rolled into the price that you pay. Excise taxes are used for improving infrastructure of airports as well as maintaining roads, bridges, and highways. A sin tax is another type of excise tax on specific activities or goods that are deemed harmful to individuals or society. The sin tax is designed to reduce consumption of these harmful products. Tobacco, alcohol, drugs, indoor tanning, sugar-sweetened beverages, and energy drinks are all things that have the sin tax attached to them. Funds collected from sin tax are used for the same thing as other excise taxes, which are maintaining roads, highways, and bridges. However, they also provide funding for gambling and addiction rehab services as well.
Tourism taxes are used to help offset the financial burdens of tourism on certain areas, such as the need for extra policing and garbage cleanup. Hotel occupancy taxes and rental car taxes, as well as amusement taxes, all fall into this category. The hotel room tax, which is also known as the transient occupancy tax, is a tax on hotel rooms. Between state and local sales tax, plus a hotel room tax, and potential cleaning fees, you might be paying an additional 20 to 30% for a hotel room in addition to whatever price the hotel charges. The hotel tax applies to motels, hotels, inns, hostels, and similar places. This tax is used to help promote local tourism and fund regional transportation. More than 40 states impose fees on rental cars, either by charging an additional tax, a fee, or both. At least 15 states allow local governments to impose their own taxes or fees on top of the state taxes and fees. Car rental companies can also add extra fees if you're renting from the airport or off-site locations. So in addition to the price of renting the car, you could end up paying a state sales tax, a local government rental tax, plus a processing fee. Your final bill will include your original rental rate, plus all of the taxes and fees. Car rental taxes are also considered an excise tax, so the funds generated from these taxes are used for maintaining roads, highways, and bridges. Some states charge an amusement tax, or sometimes referred to as an entertainment tax. Movie theaters, concerts, circuses, boxing events, and other places of amusement can charge an amusement tax rate of anywhere from 1 to 10% of the admission fee. When you eventually buy a house or property, you'll pay property taxes on that as well. These taxes are another type of state tax that are determined by the value of your property. They're typically enrolled into your monthly mortgage payments, and these type of taxes are used for improving infrastructure, public services, and local public schooling. In this lesson, you learn about why you pay taxes, what type of taxes there are, and what your tax dollars pay for. There are a million types of other taxes, but these are the main ones that apply to you right now or in the near future. I wasn't kidding when I said that literally everything is taxed by the government. Not to mention, the money that you earn is taxed by the government before you even get paid. Everything that you buy is taxed, and pretty much anything that you sell for a profit gets taxed as well. In the next lesson, you're going to learn about the different types of income.